We just had the Tesla Q3 earnings call, and boy, it was a big one. There's a lot of information that was shared, but also just the mood in general. Want to get everybody's opinions of what they think happened. Let's start with you, Alexandra. Tell us what your opinion is of what was the big thing that you heard today.
So, how to best sum it up? I felt intuitively there are two personas of Elon. He is still completely determined to win this AI game and throwing as much money into that game as necessary and feeling very positive about it, very positive about the team he has built, very positive about the products and services that will be Tesla's offerings. So on that side, nothing changed, and I felt him as determined as ever. On the cost side, he was much more prudent. He took into account economics. Affordability was the key. I don't know how many times we've heard too high interest rates, and my gosh, if interest rates go even higher. I think they're playing it very safe on the capacity front from the cars, from the ramping speeds. They clearly said that Shanghai is still in the ramping phase for the Model 3 Plus. Obviously, the Cybertruck ramp is now an 18 months project to get to 250,000. So we had a lot of clues that this is prudent, making people understand, how difficult of a product Cybertruck is, but how revolutionary it's going to be. Model 2, or whatever we're going to call it, is going to be less of a stress, but still taking more time. So I saw him actually on both sides. And as I concluded earlier, I really do believe that shows that on the AI side, he feels he needs to be first there and he's determined to do it. While on the car side, he feels there is no competition that can currently produce cars that are comparable and have the same profitability, and therefore is reducing risk as much as he can. He felt at times emotional about his experience 2008, 2009, called himself probably too paranoid about this experience, which seems to be clear, which is funny with, Elon 15 minutes earlier talking about his AI investments. Funny, probably not the right word, but really in stark contrast. So given the financial results, which were complicated. I mean, I don't want to say subpar because it wasn't horrible either, but it was certainly not the results we had hoped for. It all makes sense now. It makes sense that we had research and development, CapEx going to higher extents than we thought, while at the same time not having the cost reductions filtering through all the way as we had expected. So it was what it was, not the most thrilling earnings call. I mean, obviously, we're all wishes for something else. I don't think it's going to have a major lasting impact on the stock, but we're in for a couple of rough days, maybe even weeks. So I don't think at all that we're getting into territories like last year. Last year, always remember, was mainly due to Elon selling and then reselling the fourth tranche where, nobody expected it anymore. So this is in no way comparable. But until the Cybertruck event on November 30th, so that was obviously a positive, that is announced now and we have a date, there will be a lack of good news. There will be the naysayers will have their forum and will come out with their typical analysis and will hammer it in. So just stay prudent. Always told you this is a medium to long-term investment. Don't be in options. No point playing this. Can be a bit volatile for a couple of weeks. There we are.
Okay, let's get to Alexandra next. I know that you're pretty upset, or maybe that's not the wrong word, but you're a little, you're focusing on the way Elon focused on the economy. Tell us what you're thinking. What was good and what was bad?
I'm actually not at all upset. Really not. The thing is, I've been studying now Elon for 3 years, nearly 3 years. I'm getting used to this. And obviously most people are not, because who else is as crazy as we are? So for us, I think this was a completely digestible call. We know him. We understand his plans. We understand we can actually finish some of his sentences because things come up again and again. Now, as I've said so many times, and it is what it is, these earnings calls are not for us. They are for financial analysts, the press, and the general public, who may actually also be retail investors, but don't have the same focus on Tesla than we have. And these people need a different way of being addressed, but that's not new. That has been the issue for all earnings calls. Today was a bit more particular than others, but that's just it. So what did they do good? I loved some of the jewels in there. The first one that I absolutely want to stress is that energy. He clearly said that, because whenever Elon says something, clearly take him by the word. Energy is going to be, is already and is going to stay the highest margin bringer in Tesla's financials. Now, no, not once software as a service is up and running. Of course not. But compared to cars, energy is just the most stable and highest margin bringer. That was good to know. Second thing was obviously good was the Cybertruck news. The date, the rampant 250,000 in 18 months. That corresponds completely to what I thought. I was asked earlier today how much I think 2024 for the Cybertrucks. I said 75,000. Could actually be more than that. So that's good, no problem. And I want them to stress how painful this is going to be. I don't want the market to sit there and it's 1,000 cars in a week or whatever. This is completely crazy. This ramp is going to be difficult, and more they stress it, more people will be prepared. So what was the bad side? Well, those unanswered questions, those eternal answers that were actually not an answer to the question, this divided treatment between AI and the car sector. People don't understand that. Most people still think of Tesla as a car company. So if they just can't assimilate what the whole AI story is about and how enthusiastic his comments on that were, they will walk away with this rather negative undertone on the car business.
Okay, I want to ask Alexandra a question about the margins. And so, when they're talking about future margins, remind everybody when he was talking about robotaxi, and he again went back and repeated everything he said, but he did end up with saying we are a hardware company with software margins. At the investor call, you had the pleasure of standing up there and asking Elon the question, what is peak margin? Meaning, what margin could Tesla get if you now are able to do FSD margins and sell that? He said 80% to you. So I wanted you to ask that. And also, what did you think about the answer when they asked them, why did you guys reduce FSD at this point? Yeah.
So perfect. Thank you. Best curveball question of the day. So Pierre Ferragut asked more or less the same question I asked at the May shareholder meeting. And you probably, if you've seen that, I had to insist a couple of times because I wanted to get something out of Elon, and actually both his answers that I finally got, which I want to call out, Jeff helped me prepare that question. Both answers I then got, he reiterated to the point today, and it's always the same reasoning. And I still think analysts are not there yet to follow his reasoning. His reasoning is the car is currently used 10 to 12 hours a week. With FSD, the car is going to be used 50 hours a week. So you're getting out of it 4 to 5 times more. Okay, that's the base scenario. So my question was to him, okay, so what does that make to margins? When and how is Tesla profiting from this higher usage of the car? And we're dancing around that for a couple of times, but what came out of it very clearly is the following. Cars, best case scenario, will always have a gross margin of about 20%. Okay, we're currently a little bit below that. I think we're going to move back there at one point again, but it really doesn't matter because that's the smaller element. The second point was energy will be at 25%. And he reiterated that today, saying energy will be the highest margin product. There we are. So that is product. That is not service. Okay, so make a clear distinction. When he was talking about highest margin product, it is something tangible compared to service. And so his reasoning of how much more can a car produce in income for Tesla, his answer was, well, we're getting into the 80% margin category. Now, there's a lot of question about how you apply these 80%. Is this 80% on all outstanding cars, then brought back as a software revenue margin? So is it in percentage of car sales? Obviously, it's not. So it's the base number for this 80% is a big question. And I've thought a lot about it, and I'm still not 100% certain I can, nail it down to the number I want to have it. But the clear answer is, and it was the same answer today, that the software as a service is where it will all play out. That is it. And energy will be a stable, high margin product. So taking it from there, I was actually surprised that Pierre Ferragu asked that question today, because he didn't get anywhere further. That seemed to have been, dealt with. And I wasn't the only one who had asked this question. There are some earnings calls. I listened to old earnings calls in 2018 where these questions already came up. He wasn't as clear in his answer then, but it's always been the same line of thinking. Now, where I did have an issue is a big word, today was the question, why did you reduce to $12,000 the FSD? And is that a trend? What can be taken? And his answer was, well, we wanted to make it in the short term affordable. So what can you read out of that? My initial thought was, okay, they wanted to sell more FSD. We didn't have any indication, by the way, if that was the case, if they sold more FSD. We don't know. There was just no number in there. We may have something in the 10K, but we'll have to wait. The second thing was that, but that's temporary. Once the value of FSD can be really applied, that perk is going to go away. And there, Pierre Ferragu, same question came back, same analyst came back and said, shouldn't you have a two-tiered system where people who want the base FSD get it at a quite affordable price, and then people who want to use it commercially and want to do a lot? And he didn't go there at all. So I think the business case for FSD will be explained once we have version 12 and when prices can really be applied in a different way, where the monthly price. My long-term theory is that there will be no purchasing anymore of FSD. People that have purchased it will stick with the car. We didn't hear whether the transferability that currently happened is going to become a perk again. But my theory is there will be no purchase of FSD ever anymore at one point, and it will only be then for new clients accessible through a monthly subscription. And that will have different cases, people who want to rent it for a day or for an hour, or others who want to have it all the time will have different prices for it. So anyway, so he didn't get into that, and I don't think it was the moment for that, like it wasn't the moment talking about Optimus in any detail. But I was surprised that Pierre, who is an analyst I respect a lot and who did lots of good research on Tesla, asked these quite basic questions. I mean, if you are in the Tesla universe, these were not the most surprising questions if you followed this year.